So can you beat the market with this overnight swing trading strategy? So 3 months into the year, the SPY is up just over 10%, the QQQ as well, maybe about 8.5%, and the IWM isn't quite at 5%. We're through a quarter of the year and I'm doing much better than the SPY. I'll share how much in a moment. Here's the thing, the average day trader that's doing well makes about 20% on their account each year. The problem is less than 5% actually achieve that consistently. That's why I like SPY trading, because I think more people are successful at it and I think I can make even more money. SPY trading is for those who wish to be more aggressive than your typical 401k trader or long-term swing trader for that matter, and really have just gotten tired of the pain and stress of day trading. So annualized, a good trader's making at least 20% on their money per year. However, my goal is 25% each month. Now I gotta tell you, I'm not quite doing that this year. This quarter has been tough, but again, I'm far outpacing the market. And I did make a few tweaks to the algorithm and a really cool adjustment to make it easier for traders to understand the SPY trading approach. I'll talk about that in a moment. But first, let me explain to our new friends on this channel exactly what we're doing here. First, we start by taking a look at this chart. What this chart shows is when the SPY, which is the ETF for the S&P 500, began in 1993. And the idea here is if you bought the SPY at the end of the trading day and you sold it in the morning, well, you would be up 600+% over this period of time, which beats out the traders who bought it in the morning and then sold it at the end of the day. What this is telling us is the action is overnight. So we're trading the overnight gap. Yeah, you've seen it. The market closes at one point at the end of the trading day, and then the next morning it's either up or down from the previous close. Well, that is the overnight gap, and that's what we're trading off of. If you notice with that chart, they're only making money if the market goes up. So if the market goes up the next morning, they sell and they made money. If the market went down, they sell and there's a loss. Well, we're trying to amplify this by not worrying about which direction. We're taking advantage of the gap, whether up or down, with options. And this worked because during this time frame, the market went up about 55% of the time. What if we could do better than 55% correct? And that's why 4 years ago, I started working on my algorithm. Before I talk about that, let's specifically talk about the three parts, the three elements to SPY trading. And the first is the time frame. It's an overnight swing trade. We buy at the end of the trading day and we sell in the morning. The next is the trade. We refer to them as SPY trades, which are just basically ratio trades, which I'll talk more about in a moment. And the last part is the signal. Which direction do we point, up or down? Well, that's available for free on the front page of spytomorrow.com at 4 o'clock Eastern Standard Time. Yeah, I can't wait to tell you how I've improved the up-down signal. Now, traditionally, we depended on a confidence number to kind of give us a clue as to how big our position size should be in our overnight trade. How much should we risk? And that number is generally from 0, which is no confidence, up to generally about 16. And it's good, but it kind of confused people, kind of confused members. And generally members could see early, about maybe 8 minutes before the close of the trading day, well, they could see the up-down signal before the market closed, but it's up or down. And then they'd have to go into the other algorithms to get a sense of how strong that up-down signal is. Well, now I've added a probability number. What's the probability that the market will go up? What's the probability that the market will go down? And you can see those probabilities in the archive on the front page of spytomorrow.com. And of course, members have that accessible before the market close. The reason I like this so much is it makes it easier for traders to understand how they should approach the overnight trade. Should they be conservative, or do they have some room to be a little riskier? And it doesn't require them to interpret the confidence number or the other algorithms that are still available to them, it's pretty straightforward. Up or down, and what is the probability? Next is the ratio trade, which is designed to help us maximize our gains and minimize our losses. However, there are a few things to look out for, which I'll explain in a moment. But first, let me explain what is the concept behind this ratio trade. So let's say our indicator said up. So we bought a call for $100 and a put for $50. That's a SPY T B trade. Let's say the ETF went up 1%, which doubled our call to $200 and cut our put in half to $25, which leaves us with $225. We spent $150, which leaves us $75 in profit. Now let's say the indicator said up and we bought a call for $100 and a put for $50, again a SPY T B trade, but our ETF went down 1%. So our call lost 50%, so it's now worth $50, but our put increased by 100%, so it's now worth $100 for a total of $150, which is what we put in the market. So essentially, we broke even. Obviously, that was a simplistic approach to showing the math. However, it gets the point across. We're trying to maximize our gains and minimize our losses. However, there are some things that you should watch out for because they can cause what are referred to as IV crushes. An IV crush means that the premiums were inflated just before a big news event. Maybe it's the CPI or perhaps earnings. And the market makers will increase those premiums the night before the news, and then the next morning the premiums drop. And whether you're right or wrong, you very well could have just lost money just because the premiums came down so much, especially if the market opens flat, which is another thing to keep an eye out for. You want to watch the IV. Flat markets are not very good for this style of trading. So the SPY is not always the best vehicle for these trades. You may want to look at the QQQ or IWM, or in a very flat market, maybe a stock that is highly active yet tends to go the same direction as the SPY. It's important to note that the algorithm is based off of the SPY, so you generally want to use ETFs and stocks that follow suit. Remember, we're trying to be correct over 55% of the time. So we buy at the end of the trading day based off of our SPY tomorrow signal, and you can use any signal you want, but our SPY tomorrow signal tends to be about 75% correct. If the pressure is up, it tends to correlate to how the market might open the next day. But that's going to vary. It's going to go in streaks. The last 2 weeks, it's pretty much been right every single day. However, there are times it's wrong 2 and 3 days in a row. So there are times it can be 80% correct, and there are times it's hovering around 65, 70% correct. And that's why we like to do the SPY T trades to protect ourselves, extend our gains when times are good, and protect ourselves when things aren't going our way. So how did I do last month? Well, as many of you know, I've been trading the IWM because it has had more volatility than the SPY and the QQQ. However, it has not been in sync with the SPY for some reason. When the SPY went up, well, the IWM often went down, and vice versa, which certainly hurt. I was able to trade my way out of many of those positions, but it wasn't a good start to the month. And then I got hit by the CPI IV crush. I wasn't even paying attention, and I put a little bit more than usual because there was a high confidence number. I didn't look at the news. That's why you got to look at the news. So I got hurt the first half of the month. However, as I mentioned, SPY actually did very well. The SPYtomorrow.com indicator had a good month, and I was able to trade my way back up. So I did lose a little bit this month, but for the quarter, I'm up over 30%. While 30% is excellent, I'm certainly not hitting my goals. I think I should be at about 75% at this point, but I think I've made some nice adjustments that'll help me as we get through the rest of the year. And the thing is, doing 3 times better than what the market is doing, well, that's nothing to be sad about. There are many ways to approach SPY-T overnight trading. You can develop a trading strategy that fits with your risk tolerance. Some people like to trade specific stocks or specific ETFs or short ETFs or leveraged ETFs, which can give you 2 or 3 or even 4 times the movement of that ETF, such as SPY or QQQ. You can also consider your favorite option strategy. Will knowing whether the market has a high probability of going up or down affect your option strategy? Or even long-term, when you want to buy or sell stocks in particular, just knowing that, hey, the market may go up tomorrow, there's a good probability that it goes down tomorrow. You can make a lot of decisions with this information. As I mentioned, I like to trade options, and I use the SPY-T ratio trades, such as the SPY-T BT trade. That's the one I tend to use the most. The original SPY-T trade was the SPY-T A trade, which is buying 2 calls to 1 put if the indicator said up. But again, we also have the SPY-T B, SPY-T C, SPY-T D, SPY-T S, and the SPY-T Q, along with some variations of those trades, depending on how aggressive you want to be overnight. I'm often asked how far out are those expirations for your options, and again, that depends on how aggressive you want to be. I'm a more aggressive trader, so I tend to look at 4 to 7 days out. Now, if it's a weekend or a holiday, I tend to look at 7 to 10 days out. So what have I been doing the last 3 months to beat the market this much? Well, I go to spytomorrow.com at the end of the trading day and I check out the signal, again, which is free at 4 o'clock Eastern Standard Time. And that will show me the pressure of the market. And that pressure often correlates to how the market might open the next day, and it's right about 75% of the time. Then I buy a ratio trade. Personally, I like the SPY-T BT trade, but there are other more aggressive and more conservative trades that you might want to consider. I'll check out the confidence number and the probability number to help me decide how much of a position size do I want to take? How risky do I want to be? And of course, I buy it at the end of the trading day and then I sell it the next morning. And I try to trade out of it to maximize my gains, or in some cases, having to minimize my losses. I also keep track of the IVs of the ETFs that I'm using because I want to work with higher volatility stocks and ETFs, because that gives me a better chance of really maximizing my trade, or if I have to, minimize the loss, but always understanding that a flat market is not my friend. Keep a steady hand, keep the emotions low, stick with your SPY-T trading plan, and you can beat the market too. Hey, how are you doing? Let me know in the comments below, and I'll see you in the next video.